Welcome to the weekly Forex analysis where we review the month of September coming up, Euro dollar, pound USD, of course, dollar yen and Aussie. First of all, be aware though that this video is shown to a global audience. Please take a look at admiralmarketsglobal.com, select your country of residence and contact the appropriate entity to find out if it is suitable for you and other details. Plus, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This video is for informational and educational purposes only, and by continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. Let's start with the pound USD. As you can see, price is in a triangle, but it broke above the resistance and is now heading towards these Fibonacci targets. So what I'm expecting basically is price to go to the -272 and perhaps after that to the -61.8 target. 133.80 and 135.25 there are the upside targets. But then those levels at the same time could also be turning spots for a move back down. On a weekly chart that looks like this, price is actually breaking through, as you can see, with a pretty sturdy bullish candle last week. And considering the fact that we broke through the Keltner here, I would expect price to find resistance at the 21 EMA, which is around 135 to be precise. At the moment, it's about 135.75. So that adds up to those targets I just mentioned. Around 135 there could be a heavy resistance spot and a turning spot here for the pound USD to continue with, of course, the downtrend that we've seen for years now on this pound USD. Moving into the 4-hour chart, basically what I'm looking for is that move up to resistance and then looking for a turnaround at the -61.8 target for downside, as I just indicated. But in the meantime, until we get to those targets, I do think that there is a continuation possible for more upside. That could either be if price hits the -272 target and then makes a bull flag. A break of that bull flag would be one way of trading that continuation on the 4-hour chart. The alternative is to wait for a bit of retracement here, a hook back to, for instance, the previous top right here, or the previous candle low right there. Those would be, basically what methods of trading a retracement for a bounce up to the -272 target. I'm not interested so much really in trading it here because it's very close or pretty close to the -272 target. So that kind of small piece is less interesting. I'm either waiting for a retracement back down to 132.50 roughly, back to these tops here, perhaps even down to the trend line as well for a bounce, or waiting for a bull flag pattern at the 72 target and then a break for that move up to the 61.8 target. Before I continue with the other pairs, be aware of these webinars. Monday, of course, Leonard is back with his FX recap on the majors. His expert opinion is also visible on Wednesday. Wednesday, I take a look at strategy, looking at market structure this time around, and together we take a look at the signs, 7 signs, why your trade setup is probably going to fail. So we're going to explain how you can use those signs, of course, to avoid entries and to exit earlier and save some of that loss. This is the Euro dollar weekly chart, and in last week's analysis we discussed the ABCDE triangle, as you see here in detail. Basically, that is still in play, and price is now, I think, in a wave D, and this potential low here could finish wave D, and I would expect a potential bounce there for wave E before we see the big turnaround and potential fall there as a continuation of the previous bearish momentum. So what we still have, I think, is down, up, and down. Of course, if price breaks through the bottom of B, then this is not a wave D, and in that case, it's already completed. But as long as price stays in between these pink lines, basically we're in a triangle, and you see even a triangle within the triangle indicating these lines. The triangle, the smaller triangle, and price is basically going sideways. I do think, though, at this moment that the wave C is finished and we're in a wave D. So if we put a fib on the very first part, this is the first part, I think this is the second part, and this could be the third part of that wave D. We're now probably starting the third part of that wave D. And if you put a fib on the first part of the wave D, right, then you can see the price stopped at the 61.8 fib right there. So I'm looking for a break below the trend line here for continuation down to 110, a break below the next trend line and below 110 for a continuation down to 107.20, which I would expect at the target the wave D to finish and a rebound back to to higher levels for that wave E. All right, so that's the breakout I'm looking for. The other scenario is that price on the 4-hour chart is basically retracing now, so it could either find weakness as it basically retests this high and turn around and then break. It could break now as well, by the way. The other scenario is that it breaks this high and goes up to the 78 or the 88.6 fib, which I expect to be basically resistance spots as well. So upside, not really that interesting unless price breaks above this high. If it does and there's a small retracement, there could be a push up to these fibs. Ultimately, though, more interesting to look for retracements and resistance at the red circles than for upside. And breakouts, of course. So breakout to the downside and resistance fibs, resistance levels are the most interesting for shorts. A potential breakout could, indicate a small trade to the upside, but nothing that much for upside unless really price breaks above this 61.8. Then there's a bigger space to the next 78.6 fib at around 114.60. All right, moving on to the dollar yen. Basically, price completed a 5-wave here. All right, so that indicates basically that there's more bullishness to come, in my opinion. This 5-wave could either complete a wave 1 of a higher degree or wave A. Whatever that is, though, I'm expecting at this point a wave 2 or B that will bring price back to the 50 or 61.8 fib. I would think that price can bounce here at the 23.6 fib, but if it doesn't break this resistance trend line, which is part of a downtrend channel, then I would expect price to fall to the 38.2 fib and perhaps later on to the 50 or 61.8 before bouncing and breaking to the upside. So that's what I'm expecting here on the dollar yen, is kind of a bull flag pattern or otherwise an ABC zigzag back to a support and then a continuation and a break. So on the hourly chart, that would look like this. You can see price is already correcting. If it fails to break above this and kind of corrects as a bear flag, I would expect price to fall down and make another correction and fall down back to last week's low here, around 101.50, 102, perhaps around these 50 and 61.8 fibs. Once that happens and price makes a retracement and then bounces and breaks, we could expect price to make a pretty good rally, I think, as this could be the start of a new bullish uptrend. In fact, we had a very strong downtrend channel, but if that channel breaks, we could be in for a pretty big rally. That is all happening at the 50 fib of the weekly chart. That, of course, could spark a pretty substantial rally to retest these resistance levels at 107.50, 110, and higher. Last but not least, the Aussie is very choppy and corrective, as you can see on the daily chart, really stuck in a very small triangle. But ultimately, I think if you look at the weekly chart, starting to look more like a bigger correction to the upside. So if it breaks above these resistance levels, there could be that breakout basically to the minus 272 target at 81. For the moment, though, price is just bouncing here and from both sides, bullish and bearish bounces. The break here would be required for breakout, for a bullish breakout, the break here for a bearish breakout, and here we have kind of buffer zones where we're basically in a break or bounce spot. At the moment, price is actually right in the middle, so not very appealing to trade, in my opinion. But if it probably breaks above this Keltner, there could be a breakout here to retest the resistance. If it doesn't, it fails to break out, then I wouldn't be surprised if price hooks back here to support before bouncing again. So those are, some things to look for perhaps this week when looking at the smaller triangle. But once again, not very appealing in my point of view. All right, thanks for joining. Hope to see you in those webinars and wish you all great trading in September. Cheers.